Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Welcome to Linqo, your go-to source for in-depth analysis and insightful commentary on the world of finance. Today, we're going to dive into a crucial topic that's got everyone buzzing. Will fresh Fed rate cuts lift stocks? So let's get straight to it. Our chief equity strategist and economist, John Blank, recently shared his thoughts on this very subject. According to him, it won't be just quarterly earnings and revenue beats that propel stocks, but rather a combination of factors. First off, we've got the potential for future Fed rate cuts being another motivating factor for stocks. With interest rates at historic lows, investors are looking for any opportunity to boost growth without adding too much risk. And who knows, maybe these fresh rate cuts will just be what the doctor ordered for the stock market. But that's not all. John also mentions other factors that could play a role in lifting stocks. One of them is the economy itself. As we know, the economy has been struggling lately, and investors are getting anxious about inflation, growth rates, and overall stability. So, any positive economic news can send shockwaves through the market. Now, let's talk about some other factors that might come into play. John points out that bullish traders are looking ahead to years rather than just months when gauging market direction. They're watching fundamental factors like interest rates, GDP growth, and global trade trends. All these will tell them if a stock has the potential for long-term success. But what about weaker traders? What's their watch list? Unfortunately, they'll be keeping an eye on sectors that are showing 0 or negative EPS growth in Q3 25. 9 out of 16 ZAX sectors fall into this category. Now, why is that notable? The reason lies in the fact that these sectors have been struggling for a while now, and it's anyone's guess if they'll turn around anytime soon. As a result, investors are taking a wait-and-see approach, hoping that things will improve before throwing their money into these stocks. Now let's talk about the recent Fed rate cut. We finally saw some movement after 9 months of inactivity. Will this spark hope for investors? And what does it mean for tech stocks like Tenet Healthcare Corporation, THC, SharkNinja Inc., SN, and Evercore Inc., EVR? According to John, tech stocks initially reacted positively to the rate cut, although we're still unsure if that's just a knee-jerk reaction or something more substantial. But here's the thing. The next phase of AI is about to revolutionize nearly every part of our lives. According to Zacks' AI Boom 2 report, this second wave will create trillion-dollar wealth for investors who get in early, especially those who picked up shares like Nvidia at the right time. So, while fresh Fed rate cuts might not be enough on their own to lift stocks, they do offer a glimmer of hope that things are about to change. And with AI poised to make such a huge impact on our lives, we can't help but get excited about what's to come. That's all for now, folks. Thanks for tuning in to Linqo. If you want to stay ahead of the curve and get insights like this delivered straight into your inbox, be sure to download our free report, 7 Best Stocks for the Next 30 Days.